But I'm going to go back to NBFCs, talk about liquidity, demand, concerns, and the environment with P. Srinivasan, veteran banker and market expert. Srini, good to have you, and thank you for joining us. There is one school of thought which says there is enough liquidity, corporates do not want to borrow. When you talk to corporates, they're saying, we want to borrow, nobody is giving us money. What is the reality?
I think if you look at the system, there's no shortage of liquidity as far as the system is concerned. It's more a question of who to lend to and how do you get comfort around you lending to someone who you believe you have comfort that things are going to be fine. And I think that's the gulf one needs to bridge, especially the lender. And the events which have happened over the last year, clearly in terms of confidence, that confidence is sort of ebbed in terms of ability to make those calls. And some of these calls which were taken some time back clearly haven't worked. So I think that crisis of confidence is something which market needs to sort of...
How will it resolve?
How will it resolve? I think I was with you people a couple of months back, and I think a top-down approach here is not going to help. A top-down approach here is not going to help.
Which is to give liquidity.
Which is to give liquidity. I think you need to, the biggest problem, whether in terms of NBFCs, real estate, power, roads, whatever it is, I think the problem is on resolution. You need to make sure that the assets, once identified as weak, are resolved in terms of restructured, actions taken, change of management. Something needs to happen which gets it across the line, and after which it's self-sustaining. And I think we need to make those calls, and we need to take actions to help get there. And so it has to be a bottoms-up approach, even on the on the NBFC real estate side, where you got to identify the top 50, 100 big projects and see what's the level of debt as far as these projects are concerned. How does one get this out of the mess it is in? And once you do that, I think things will automatically flow. But if you try and do top-down in terms of I'll give you liquidity, I'll give banks liquidity, and the banks will find, and this liquidity will find its way to the people who need them, it's not going to happen. Liquidity will go to people who don't need them. Yeah. People who need the liquidity will not get it.
Are we at the peak of the bad news now? Because almost everyone on the street is convinced that Yes Bank will struggle to survive as a franchise. India Bulls has not got its permission to become a bank now. If I look at other NBFCs also, Diwan Housing and Pyramid Enterprises, they are in a deep hole. I'm not getting into specifics, but what I'm trying to understand from you is that, do you think in terms of mood, the mood is here and the reality is here?
Again, I will tell you the same thing. I think last time when we met, I was the one who said the next 6 months, whatever you want to buy, do a SIP. I think you'll see the worst over the next 6 months. I think 2 months are over, next 4 months. I would
4 months is a long time.
4 months is a long time, but I'm saying you do not know which, you do not know which straw breaks the camel's back. You don't know which action sort of tips the market back at the inflection point and takes it to a place where people don't expect it to go today. But that will happen. Meaning, I think the extreme bullishness, extreme bearishness in the market, and what value one perceives in a lot of assets clearly is good for the long term. But what changes the sentiment is something which you cannot call today. And that is where I think, so you can say today, are we at the most bearish point today, or whether we're going to be there in 1 month from now, 2 months from now, we don't know. But it's somewhere around the corner. It's somewhere around the corner, and there would be actions which take this out of this hole, but we cannot predict that. So if you are an investor, I think you just need to not rush into the market today, but sort of keep on sort of nibbling at it, and I think you will get there.
So, when we don't really know exactly whether or not this is the bottom or not, when do you expect to see, is it reasonable to expect to start to seeing some results as early as the Q2 financials? There have been so many moves that have been taken to try and...
So I think if you wait for the results to tell you when to buy, you're late.
Never wait for the robin.
So basically, I think you will see the market sort of, the inflection point of the market's much ahead of what you will when you see the numbers. Okay. So clearly, I think don't wait for the numbers to tell you when to buy.
So let me ask this question to Srini the investor, not Srini the banker. There are two types of broad franchises in Indian banks: corporate dominated franchise, retail dominated franchise. Retail dominated franchise have done exceedingly well. They managed to minimize the risk. The retail segment is growing. The aspirational levels are going higher. And Indian banks have done a great job in creating a formidable retail balance sheet. The corporate balance sheet has got neglected. Some because of external factors, some because of the way banks have been reluctant in lending to infra companies and other large ticket investments. which balance sheet would you bet on?
I don't think there's any corporate banking franchise or retail banking franchise as far as Indian large banks are concerned. The people who are overweight in terms of retail have moved a lot. If you look at the last 3-4 years, the incremental corporate lending which has happened in supposedly the retail franchises is much higher than supported corporate franchises. And the corporate people who are overweight on corporate have moved the other way. So if you look at where people are today, in terms of, if you look at the distribution in terms of corporate, retail, SME, broadly, I don't see much difference. If you look at, everyone is 50 to 60% in terms of retail SME and 40%. So whether you call them retail franchises, whether you call them corporate franchises, in terms of the nature of business and the composition of business, I don't see any difference. People who are one end of the spectrum have moved somewhere to the center. People the other end of the spectrum also moved to the center. So to that extent, I don't see, it is a question of when did you sort of get overweight in each of these franchises?
Yeah.
And I think that is what is going to make a difference. So if you are in a crowded trade, if you got overweight on retail and when there's a crowded trade, you will sort of, the risk reward was not in your favor or you're not paid value for it. And if you were in corporate when everyone was there, the value you got paid for as far as corporate lending was not there. So I think it's a question of what is the value, what is the pricing which you sort of got at that point of time, and whether you got paid for the right risk reward. And I think that is what is important. And I think, yeah, clearly the market clearly distinguishes between who possibly got paid for the risk he took and for the time he went into the market. And that's what's going to hold them in good stead. But in terms of this corporate versus retail franchises, I think it's a misnomer in my view.
Okay, I'm just going to go to the market check very quickly because my producer is insisting that we need to mark that recovery which has happened at least in some of the mid-cap names. So from the day's low, you've got, why mid-cap? In fact, Tata Motors is holding steady, Yes Bank is holding steady. Indiabull Housing, that big V-shaped recovery what it saw in the second half, that is not going to, that is not sustained itself. So that also, I think, is clearly visible. Srini, the other big question is that what's happening with PAMC? It's a challenge with cooperative banks. Cooperative banks, time and again, have not followed their fiduciary duty of lending. They get into all kind of nonsense lending. Is this entire cooperative bank debacle a one-off, or more could come as the economy unwinds?
Yeah, I think from a level of sophistication in terms of lending in terms of some of these sectors, I don't think so. They have the wherewithal and expertise in terms of doing that. Invariably, they end up doing it, and therefore there's a price to pay when the cycle doesn't go in your favor. So it's you can't call it a one-off. You will see some of these things coming up, the skeletons coming out of the cupboard once in a while. But that's something which we need to fix. I think hopefully this crisis will sort of make sure that we take the lessons out of it and make sure we do something which sort of hopefully doesn't cause another PMC.
We had Tamol Bandapa there. I respect him as a journalist and his insight in his view of the banking sector. And his view was that at the beginning of the year, it appeared that we are at the tail end of the NPA crisis. But his view now is that till the time real estate sector will not come out of the woods, there is no way you can come up with a conclusion about where the NPA cycle is headed. So bottom line here, according to him, was that till the time real estate sector in India will not revive, you cannot get a clear picture on where bank NPA is headed. Do you think it is that bad that real estate has to do well for banks to do well?
I think it's a problem we need to fix. Because in my view, the primary entities which would be affected by a real estate development blowout is going to be not necessarily banks. I think banks' exposure to development as far as real estate is concerned is not so high. It was basically the NBFCs. So you would have the NBFCs get hit first and the ripple effects of that affecting mutual funds and banks. And I think that's the way one needs to look at it. So yeah, banks would be affected and real estate is a problem we need to fix. And this is something which we've always been aware. And once you fix real estate, you could have issues in terms of LAP, you could have issues in terms of some of the other products. So it's not I don't think so real estate is just a corporate problem. I mean, it's not a corporate sector problem. I think you will have ripple effects again flowing through into some of the other segments which are not necessarily corporate.
All connected.
Okay. Recent indicators, they're saying that banks have barely recorded a slowdown, that deposit rates have lowered quicker than transmission, and that's really what it's all about. And this will end up boosting bank performance in the coming year as well. Would you agree?
Yeah, I think deposit growth is lower, credit growth is lower. clearly volume of business done is lower. So I would think, clearly that needs to correct for bank performance to sort of look better. Basically, ultimately, irrespective of whether NIM is 4% or 380, the volume of business will make a huge difference. And I think as long till growth comes back, you're not going to see that thing revive.
So again, coming back to corporate versus retail, I think the only, the bright spots that we're seeing and the stocks that have been seeing some performance are the ones that are catering to that segment, to the retail, to the micro loan. That's really where we're seeing a bit of activity.
I don't fully agree. I think I believe people who are growing, and I think you can pick your spots where you want to grow. People who are ability to gain market share and people who are ability to grow are the winners. I think it's plain and simple. So one bank can pick MFI, some bank can pick corporate, some bank can pick SME. But ultimately, you need to make sure that you are growing in this scenario and you are gaining market share, and that's what's going to make you a winner.
Okay, I'm going to take the clock forward. Not December 2019, but let's say December 2020 to 2023. And if you're engaging in a same conversation, what kind of financial sector picture do you think we could be staring at? Will big become bigger? Will the smaller NBFCs and PSU banks get completely wiped out? What will happen to these niche NBFCs like a Shriram Transport or a Manappuram? I'm just trying to understand your view, your thought, your vision, your big picture view for the Indian financial sector 3 to 4 years down the line.
Forget 3 to 4 years down the line. Let's see how we get out of this period. And I've got a very different view here.
Yeah, of course.
The sector will do well when PSU banks do well. They're 70% of the banking system is them.
Still with them.
So you can incrementally gain market share. Private sector banks go from whatever 27 to 29 to 31, whatever. Yeah. But ultimately, it is going to be it's a battle which is over 10 years. Now, suppose you want to get out of this hole. Yeah. Private banks are not going to get you out of this hole.
Yeah.
One, they're risk averse. They're not going to take the risk which is needed as far as this scenario is concerned.
They'll not grow beyond 15-20%.
Not only that, I think the people who want the money, I don't think so the private sector banks are going to give them money. Are going to be the first ones to go and give them money.
Okay.
You need people who have risk appetite, whether pushed to do it or whether they do it. So PSU banks have a liability franchise. The deposit base is still reasonably okay. They may not be growing at the same rate as private sector banks, but they are 70% of the system. They have deposits which are large. They need to put it to work. And when they put it to work, private sector banks will do extremely well. The system has to do well. Private sector banks today are doing well, but they will do much better in a scenario where PSU banks are doing extremely well. So the whole thing is this 70% of the system has to sort of get up and start taking on the load. If they don't take on the load, the system is just going to struggle because 3-4 banks are not the system. They can be the system 5 years, 10 years down the line, but today they're not going to take the load. And especially when you need things to be done in sectors which are necessarily not necessarily
capital starved.
Yeah, which not capital starved, risk appetite.
Yeah,
at the risk appetite. I think you need people with risk appetite to come in and take the load. Yeah. And I think that's not going to happen without PSU banks stepping in. So it's a great trade. Private sector banks will gain market share. It's all okay. But will the system get out of this hole? I think private banks will not get the system out of this hole.
Okay. So why PSU banks?
Because they are the ones who have risk capital. Meaning, ultimately, who is underwriting the risk? The government.
Yeah, of course.
So we can argue whether it's right or wrong, but you need
taxpayers actually, not even government, taxpayers.
No, we've got taxpayers, but ultimately, someone has to take that risk.
Yeah. The intermediary is government and banks in this case.
So someone has to take the risk. And today, risk takers are absent, and you need someone to be stepping in there and taking it, whether actively or by getting nudged there.
Well, so fantastic to have you back. I always thought that you had DNAs of a private bank, but a private banker talking PSU banks.
No, I say private banks are doing well, and I'm saying private banks will do well when the system does much better. Yeah. If the system is growing at 20%, private sector bank will be growing at 30%. If the system is growing at 10%, private sector bank will be growing at 15%. Sure. So you need the system to step up to 15-20%, for which without the PSU bank you're not going to get there.
Fair point.
No, so the private bank trade is on, but for the private bank trade to perform better, you need the system to do well. Today, I think the system is struggling.
That's a fair point. We never think like this, but thank you. It is a very differentiated thought.